Morgan Stanley just hitting, and I don't know, is 80 cents? Is that a clean number? Because that'd be below,
wouldn't it? It is a clean number,
it?
guys. It's a miss. 80 cents EPS. The expectation was for 89 cents, and the revenue came in a little behind as well. 8.5 billion. The forecast was for 9.3 billion. If we dive in first onto their wealth management business, which of course would have been tough given the market environment, the revenue there 4.1. The expectation was 4.45 billion, and the pre-tax margin, which has been steadily improving over the long term, it's something analysts watch a lot, disappointed. 24.4%, the forecast 26.5%. Again, if that's a one-off, then perhaps the market can look past it. It was a tough quarter for markets, of course. That flows through to trading as well. Equities was decent. That was 1.9 billion, essentially in line with estimates. Fixed income, as with the other big investment banks, that disappointed. 564 million. The forecast was for 800 million. Of course, for Morgan Stanley, fixed income is smaller than equities, so again, less of a hit than perhaps it could have been. Investment banking actually pretty solid. Overall, on the front page of the press release, they do say firm-wide net revenues were negatively impacted by the volatile global market environment. Of course, that comes through both on that fixed income trading and the wealth management performance. So the EPS was a miss. It's down 2.5%. Though remember, week to date, coming into this, it was up 6%, 6.5% at yesterday's close, giving back 2.5% this morning.
They got a tax benefit. It says fourth quarter earnings per share was boosted about 7 cents by a net discrete tax benefit. So I just wonder whether is it really 73 cents? Or?
No, because obviously that's also forecasted into what the analysts' consensus.
You think? You never know. Yeah, maybe.
Yeah, it is. It is on this one. It's the consensus was for 89 cents, which, by the way, a few months back was a lot higher, as it was with all the banks, and they all came down, the estimates. But no, it's 80 cents against the estimate for 89, so it's coming a little behind expectations.
Well, it's not bouncing yet. Almost 4% now. Wolf 42.
Yeah, listen, Joe, coming into this on Monday, on Tuesday, we saw some banks beat on one line but not the other. Citi beat on its EPS but missed on revenue. Yesterday, we saw for the first time two of the big banks beat on both lines and beat pretty comfortably. Bank of America and Goldman Sachs both beat top and bottom lines, and that dragged the whole sector higher, including Morgan Stanley. And then, of course, Morgan Stanley today missing on both lines. And that's why it's giving back some of the gains it already had. And again, I go back to the point, it was up 6.6% week to date coming into these numbers. And it's up significantly, of course, since Christmas Eve and that sell-off.
Fourth quarter revenue hurt by the volatile global market environment. So they...
I thought they make money on volatility.
That's what I mean. We were talking about that yesterday. They like volatility until they don't like it.
Mike made the point yesterday that this was just a huge
It was a different type of volatility, and coming at year-end,
there was no upside.
Limited their ability to capitalize on it. It was a one-way
But I'd also say the thing that they've grown a lot, Mike, in recent years is wealth management. So there's the trading, the execution part of the business in the investment bank, which of course benefits from good volatility. And the equity market part of that did. The fixed income did not. Thankfully for them, that's a smaller portion of total trading. Then there's the wealth management part, which, as I said, total revenue now of 4.1 of, which is sort of roughly 50% of their business, just behind 50% of their business. And wealth management, of course, gets hurt when markets turn down.